Good evening, everyone. Time for another silver update. I'm going to make a little change in my video series tonight. I started it last night. I'm going to try to do my videos in 3 parts. Basically, at the beginning I'm going to do a market analysis, and then in the middle I'm going to do the top story of the night, and then at the end I'm going to do a blog roll, which is the review of my blog. So hopefully that's more useful and a more consistent pattern. For those of you who want to just see the market analysis, you can tune out. And for those of you who want to just see the top story, you can skip ahead. And then, of course, the blog roll is for those who want to see what's in the blog. So the market segment that I decided to do tonight, this is the weekly chart provided by NetDania. And you can click on the link below, netdania.com. This is a modified Fibonacci series that I put together here. Now, I'm not one who's really big on the Fibonacci's, but the reason why I put this together is because I'm trying to create some type of price projection for the next move. Now, if you believe that the end of the precious metals market is here and the end of the silver bull market is here, obviously this isn't going to be for you. But what this is based upon, I'm going to roughly outline what I've done here. I've started with the last top. Now, I didn't choose the Warren Buffett top because that was many years ago, but I used, for the 2003 section here, I used the top that was formed in mid-2002 and then was broken out of. So I'm measuring from the breakout point of the last top, and in each of these series you can see that's what I've done. Then I also drew a trend line, but I'll call this a spike or acceleration line. And the interesting thing to see from this is that the slope of the acceleration changes. So if you look at this series here, we've got a trend support line drawn from this first top, and then we get the acceleration to a new top, and then we draw a line. This line at the old top is the marking of the beginning of the new run. And that pattern continues. We get a top, and then we're going to mark the beginning of the new run, and then we're going to, now this section here is an outlier, so we're not going to count that. We're going to count this top and then the acceleration from that top into the new price range. So what this yields is a couple of things. The first thing it yields is this slope of this line of acceleration. Now you can see that this is getting steeper. This first line is not quite as steep as this line, which is not quite as steep as this line, and then the last line we have here is parallel. I've drawn in a projected line for the next segment that I'm predicting if you don't believe that this bull market is over but is going to go into the next stage. Now, what's so very interesting about this series, and I'll call it a modified Fibonacci series, is that the first measurement we get here is from roughly, we'll just call it 5.8 to 8 point something. So we're going to call this $3.50 for this first move here. That's the size of this first move. Now, if you notice, the next move we get is roughly $7. You've got 8 something to 15 something. So we're going to call this a $7 move. And you can see we've got 15 or below 15 to a little over 21. So we're going to call these $7 moves. So the first thing that stands out at you in this series is that we get a 350 move, which doubles to 2 steps of the previous move. So we went up 350, then 7 and 7. Now our next move is going to measure from the top of the old high and the breakout point above that top to the top of the next high or correction point. Now this move here from 21 something to roughly 49 is roughly a $28 move. We're just rounding numbers for the purposes of extrapolation. So you've got a $3.50 move and 2 $7 moves and then a $28 move. Now, for those of you who are into Fibonacci's, the first thing you're going to notice is that this is a sort of Fibonacci series. So if this went 350, then 7 and 7, that's twice this number, then 4 times this number. And if this pattern holds in the stable pattern that it's establishing, then you would get another $28 move, which would bring you from this top, you measure from there up 28. So you're looking at roughly 49 plus 28. So you're looking at roughly $77. So that's going to be the top of your next move if you get 2 of these. Now, the way it gets really interesting is that if this Fibonacci series continues, then you've got 1 and then 2 2s and then 2 4s of the previous move. And then the next series would be 2 8s. So we'll bring out our calculator, and we have to calculate this last series is 28. So it's 28 times 4. Actually, I'm sorry, it's going to be 28 times 8. So that projects 2 $224 price moves. So that means once we get our next $28 price move, which will bring us to roughly $77, then you're going to get 2 $224 price moves on top of that, which is going to take you to roughly $500 and something. That's what you're going to get if this type of Fibonacci acceleration continues. Now, I don't know that that's going to happen. That's just a projection. Fibonacci's are something that are very common in nature. You can see them in spirals. You can see them in your shellfish. You can see them in your mysterious conspiracy crop circles. They're all over the place. So Fibonacci's are a real mathematical reality, and this seems to be a Fibonacci sequence. I don't know how it will continue. Math series are those types of things that you only know where you've been when you get there. You can look back and see where you're going. It's very possible that this could go from 1 350 to 2 7s to 4 28s and then to 8 $228 moves. Anything is possible, so we don't know, but there appears to be some type of Fibonacci sequence building here in this pattern. Now, I want to take you over to the top story tonight. This is a story that was actually covered by Eric and Joe on Patriot Radio News Hour, and I'll cover that on the blog roll. But this is a story out of Rhode Island. It's a tiny town, Central Falls, Rhode Island, and this is a fascinating story because if you followed the calls of Meredith Whitney, and she is the be-all and the end-all of Wall Street and hedge fund analysts in regards to the upcoming municipal default, and she's predicted within the next 5 years cascading municipal defaults. I don't think there's any question that she's correct. Of course, she's been pilloried from stem to stern on all the mainstream media, but I think this is an indication that her calls are showing to become correct. So this is a story out of Central Falls, Rhode Island. Let's read some of this so we can dig into it. Retired firefighters and police officers in Central Falls, Rhode Island, agreed to cut their pensions and support a plan that would likely give bondholders everything they are owed by the struggling city. Now, the first thing you want to think about is why. Why is it so important that bondholders are given everything? Well, of course, because if you get a default situation such as we had, and they'll talk about it below, in Vallejo, that could cause ripple effects through the muni bond market, and they don't even want to touch that. That is the 10 million ton elephant sitting in the middle of the room, and they don't even want that to start. So that's a snowball, that's an avalanche, that's something that none of the powers that be want to see start rolling. But you can see these are some trickles, these are some indications of what's going on. Would likely give bondholders everything they're owed by the struggling city. The unusual arrangement is being watched closely by municipal bond investors and government officials across the U.S. because it could be cloned in an effort to keep borrowing costs from spiraling higher in municipalities near financially shaky cities and counties. The deal also could spare Central Falls from a costly legal battle with retirees while giving bond investors more clarity about the security of their investments. Central Falls, with a population of 19,300. Now keep that in mind. This is the number of citizens in this town. Now that's not necessarily the number of taxpayers. Keep that in mind. I covered that yesterday in a number of posts about what percentage of the population actually pays taxes. So you can be guaranteed that this number is not the taxpayers. The taxpayers are much smaller, but we'll go with this number. So 19,300 and a severely underfunded pension plan filed for bankruptcy protection in August. The city has about $20.5 million in bond debt and $47 million in pension liabilities. Now, if you multiply that or do the division on this, you get a few thousand. If you look at taxpayers, you're looking at tens of thousands. So I'd like to see the average wage in this city. You may be talking about a large percentage. You're talking about a top-heavy situation here. And when we look at the federal picture, you'll see it's even worse than this. But so you've got 19,300 population and a $47 million pension liability. As of Monday, 82 of about 130 Central Falls workers had agreed to support the pension cuts, which will total 25% over the next 5 years for many of the recipients, said Matthew McGowan, a lawyer for about 100 police and fire retirees. So you've got about 100 police and fire retirees, and it looks like you've got about 130 active workers. So if I'm correct, you're talking about 250 that are working for government out of a population of 19,000. Now that's not really that bad of a ratio until you look at the level of compensation. A minimum of 75 retirees had to support the proposed agreement. The state-appointed receiver overseeing Central Falls is expected in the next few days to ask a bankruptcy judge to approve the agreement with retirees, said Theodore Orson, a lawyer for the state. Before the city's financial collapse, Rhode Island lawmakers passed a law that puts bondholders first in line among all creditors of municipalities in the state. The retirees vowed not to challenge the state law as part of the agreement. Mr. McGowan said retirees backed the deal partly because the state director of revenue will ask lawmakers to appropriate about $2.6 million to help them cope with smaller pensions. Without the state aid, the cuts would be 55%. So now you have the state coming in and bailing out the municipality. Quote, "We have many strong legal arguments," Mr. McGowan said, "but in a practical sense, they don't get you very far if this city has no money." Now, I've got to stop there because I'm running out of time, but it's a fascinating story. You can go and do the numbers yourself. Look at the number of residents, look at the number of taxpayers, look at the number of government workers, and look at the pensions they've been promised. And you can see that, as Meredith Whitney has pointed out, continually and been pilloried on all financial media, that this is a bomb, a ticking time bomb. Now, I wanted to jump over to the national debt clock because that's going to give us the picture on the federal side, and I don't have a lot of time to spend here either, but one of the key tickers that I noticed here when I was on this site the other day is this ticker for federal pensions. Now, if you'll know, and I've done the math ahead of time, so I'm not going to bore you with the calculator, but if you look at this number for federal pensions, you have, these are the largest budget items in the budget. You have Medicaid and Medicare, Social Security, Defense and Wars, Income Security, Net Interest on Debt, and federal pensions. Now, the federal pensions come in as a $214 billion piece of the pie. Now, the other figure you want to look at here is the number of federal employees. So you've got about 4,300,000 federal employees, and you've got about $214 billion in yearly obligations. These are yearly obligations. So the first thing you want to notice is you're just going to take this number and divide it by this number to give you the amount of money that you're paying every year towards federal pensions. And I can tell you right now, because I've done the math, it's about 50,000. So the other number you want to look at is this number here, the Social Security, the amount of the pension payroll, or whatever the term is they're using now. They're saying they're going to pass a tax cut and not tax this higher, but in reality we're collecting about, or not, we're not collecting, but this is what is going out. $725 billion a year is going out towards Social Security recipients, and the recipients are down over on this red column here. The number of Social Security recipients is in this U.S. retirees and SSI number. So you've got 66 million collecting this number. Now, the first thing that jumps out at you is that number's only about 3 times this number, yet this number of federal workers is 4 million, and the number of retirees is 66 million. So when you do the math, what you find out is that federal employees get about $50,000 a year, but Social Security retirees get about $10,000. So you have a 5-fold difference between government workers and the rest of the sheep that are paying into this system. So that is the same as the bankruptcy we saw in the municipality in Rhode Island. It's a extreme situation where a tiny population is paying for extravagant benefits for a percentage of government workers. These are basically a new royalty. These are people that believe that they deserve larger benefits than you get, than you pay for. They think they deserve a larger piece of the pie. So I'm going to call this section Pension Bomb, because Meredith Whitney has laid it out. This is a bomb that is going to explode. It's going to explode and destroy all municipal debt, all state debt, all federal debt, and absolutely explode. And you're probably going to see, due to popular demand, a merger of this federal pension number and this Social Security number so that they get the same thing. That is my prediction. Now, I want to take you over to the blog roll because there's a lot of stories that I covered today. I don't have the time to get into them, but this is the Patriot Radio News Hour. They centered upon this story. You really need to listen to this show because they really go into detail about these municipal, state, and federal pension situations. The next article is Lower Metal Prices Are a Gift. That is from Patrick Keller. Excellent article. He fingers the government as the entity that is shorting gold and silver. That's his opinion. The next is an article by Zero Hedge, and it is from Porter Stansbury. He is a semi-famous person after he came out with his big announcement about the doom of the United States, but it's an excellent article. He goes into the moral bankruptcy of the democratic social welfare state and how that has really destroyed the moral fabric of the inner cities and has destroyed the economies of those cities, and pretty much has led to the decline of America in the inner city, which is now spreading to the rest of the country. So you really need to read this article. It's an excellent article. The next article is an article I wrote. It's about Bank of America, and it's called Too Big to Flush. I've already asked for forgiveness about the potty jokes about this, but what I document in this image here is that every time Bank of America has verged upon breaking through the $5 point, we get very large rallies in the stock market. Today was no exception. We had a 290-point rally the first time, a 490-point rally the next time, and today we had a 300-plus rally. And this is every time this bank, which is, in my opinion, the next Enron, the next WorldCom, and it links my video about BOA being DOA. So they, whoever they is very interested in stepping in and keeping this bank from going under $5. Next story is an interview on SGT Bull's channel with Jim Willie. You need to listen to all three parts of this. I can't say enough about that. Now, I've done a doomsday article about stocking up, and there's an article also from Simon Black about B of A and how you're not a part of it and you need to extricate yourself from the situation and appreciate the fact that their debts are not your debts. And there's James Turk's Hyperinflation Watch, most recent post, and there's my last silver update. So that's the blog roll, and the main story tonight is the charts. Even more important than the municipal bankruptcies that are obviously on the way is this, in my opinion, very valid potential Fibonacci sequence. And the next in line on this Fibonacci sequence is going to be a $28 move from 49. And potentially, if that doesn't take place, we're looking at a $224 move, which is eightfold of the last move, and that will take us up into the 500s, and we'll talk to you next time.